Hello and a happy new year. I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 10th of January. It's been a fairly volatile start to the year, very sprightly beginning at the start of the week, both in terms of the US and UK markets, somewhat undone after the release of the Federal Reserve minutes. This seemed to confirm a rather more hawkish stance, which kind of caught markets on the back foot. It seems that the tapering program may now be accelerated, with most people now believing that the initial interest rate hike will come in March, with two more before the end of the year. This was enough to unnerve investors, and of course it particularly hit the interest rate sensitive stocks such as big tech. Nasdaq in particular bore the brunt of selling pressure, although by the same token it was rather more positive for the banks, which could have a read across to the UK in due course. The UK itself was rather less affected by these concerns in the States. Indeed, it was supported by the likes of the oil stocks, where a buoyant oil price pushed up the majors such as BP and Shell. There was also some strength in the UK banking sector and of course in the airline sector as well, on hopes of fewer restrictions in terms of international travel. So in the very short first week of January, we're now looking at a situation where the Dow Jones is currently down 0.3%, S&P 500 down 1.5%, the Nasdaq is down 3.6%, and the FTSE 100 is bucking the trend and is currently up by 1%. So turning to next week, as you can imagine, we're starting to see some of the Christmas updates coming through. There are trading updates due from both Tesco and Sainsbury. We had some industry research earlier in the week suggesting that in terms of market share, Tesco had been a winner over the Christmas period. So that's something to look out for when they release that trading statement. There was a previous profit upgrade, so that will be interesting to see whether that's something Tesco has been able to maintain, and also any further news on the ramping up of its online capability. In terms of Sainsbury, quite apart from its own performance on the supermarket shelves, probably worth looking out for Argos in its performance over Christmas. It had previously been quite strong in terms of consumer electronics, but there were some concerns also around supply chain blockages. The two supermarkets have had fairly differing fortunes over the last year. Tesco shares are down 7% over the last 12 months. Sainsbury's shares are up by 12%. Marks & Spencer also has an update. Again, its tie-up with Ocado will relate to the Christmas period. These shares have been flying over the last year, up 79%. Obviously, the pandemic accelerated the change that was required at M&S, and we'll see further evidence of that, no doubt, next week. The food part of the business has obviously been very much a staple of its recent growth, but equally promisingly, the long beleaguered clothing and home part of the business was also showing some signs of life. And finally, Persimmon, share price flat over the last year, despite what has been a very good trading performance. Usual things to look out for in terms of a trading update: its forward order book, its current cash position, margins, and of course revenues, and whether its own exposure to cost inflation, which has held the share price back somewhat, continues to be the case. Thank you for watching. Have a great week.